Good morning from London. I'm Kriti Gupta alongside Guy Johnson and Lizzie Burden. We're an hour away from the opening trade. Here's what you need to know. Earnings rolling in on both sides of the Atlantic, from Novo Nordisk to Santander and even Alphabet. We're going to break down the numbers and speak to the executives. Nissan is leaning towards abandoning plans to combine with Honda, according to a report. It's a move that could end talks around a potentially historic deal for Japan's auto industry. And Donald Trump revokes the de minimis rule for China as the United States Postal Service temporarily suspends packages from China and Hong Kong as the new administration's trade war ramps up. Lizzie.
We're checking in on these markets, Kriti, after a choppy session yesterday, and the mood is cautious in Asia. We had US tech hit last night by the disappointment on Alphabet and AMD. Futures pointing lower on both sides of the pond this morning, the 10-year yield at 4.49 as we await more data on the US economy. And oils struggling this morning, down 0.25%. Commodities struggling as well this morning more broadly. The countdown to the opening trade starts right now.
Good morning. There's a lot going on. There's a lot of things we need to factor into these markets right now. You've obviously got what is happening with tariffs, what is happening in terms of the M&A story. We'll talk about Honda Nissan in just a moment. The big thing, though, I think this morning, running throughout programs, I think throughout the rest of the day, will be what is happening with the earnings picture. Obviously, a lot of tech earnings breaking last night. We've got GSK dropping onto the screen at the moment. There is a raft of other earnings we'll deal with. So let me just tell you what this UK giant has delivered. A beat, EPS and top line. It's also upgrading its long-term targets. This all looks pretty good. We've also had Novo Nordisk out with numbers as well this morning, and we've got Total dropping. We're going to be talking about Santander in just a moment. Lizzie, where do you want to start? Actually, Kriti, let's just do it with Total, first of all. Where do you want to start?
Yeah, let's do it. You are seeing some of the numbers kind of come in a little bit. I want to say lukewarm, I think, is the best way to put it. I'm looking at an adjusted EBITDA number that's coming in about $10.5 billion. The estimate there was about $10.7 billion. So coming in a little shy of estimates there. But your EPS, on the other hand, coming in stronger than estimates. I'm looking at $1.90. The estimate was $1.86. So, Lizzie, seeing some mixed numbers in terms of Total.
Yeah, and we've also already had earnings out of a number of European banks. You mentioned the themes of tariffs and M&A, Guy, and they feed into the banking story, of course. Santander has a huge market in Mexico, so the relief there, at least for now, for Santander. But record profit reported this morning from Spain's biggest bank, a €10 billion buyback over the next few years. And then M&A-wise, of course, we need to think about how that factors in, not just for Santander, but also for Crédit Agricole reporting this morning, also reporting a profit beat. And it's got to navigate that M&A picture in Italy too. The other one reporting this morning we've got to talk about is Novo. So the focus very much the sales for Wegovy and Ozempic. Speculation that actually demand tends to be higher at the start of the year and taper off towards the end. And indeed, we saw a slight miss on the Wegovy sales, but a slight beat on Ozempic.
Is that because we all eat too much over Christmas?
Well, it's because, like my yoga class, everything's full in the first classes.
Gyms are packed, yoga classes are packed. Yeah. Everybody's eating too much.
I mean, to me, I think what stood out in all these earnings is this kind of theme of buybacks throughout the Santander story and the Crédit Agricole story. We're talking about M&A. We're talking about perhaps European stocks not catching that bid. Why now buy into a stock market, to buy into these bank stocks when there are tariff wars, when there are considerations around that? And don't you want that cash cushion? And to see that deployed into the markets, I think, is interesting from some of these banking giants.
Keeps the market moving on, though, doesn't it? That's what investors are looking for right now, looking for returns. Obviously, it gets your multiples as well to look a little bit better. You talk about the fact that Europe is maybe underperforming at the moment. Europe's having, in some ways, a very strong start to the year. Now, a bit like all of us, it always has a kind of a bit of a strong start to the year. It comes out of the gates very strongly, heads to the gym, things are looking a little bit fitter, moving forward from here. Is that sustainable? Is the real question, because historically it hasn't been.
And you've got
my
the
gym performance.
ECB cutting rates, so how sustainable is it as that happens? Let's
talk about Honda Nissan. This is one of the surprises, well, maybe not a surprise, that's come through this morning. So the deal is off. Basically, where we had got to sounded like it was that Honda was going to acquire Nissan. Nissan doesn't feel like that is the deal that it wants to do. So we have a breakdown in terms of the agreements of terms. Basically, Nissan doesn't sound like it wants to be a subsidiary of Honda. So where do we go next? Where does this leave Nissan, I think, is a key question. That is a business that's really been struggling. Dan Curtis made a really nice chart talking about the EBITDA difference in terms of the EBITDA you generate per car made by Nissan and Honda, and the difference is stark. What does Nissan now do to try and play catch-up? And I think there's going to be a read across this morning into Renault as well, here in Europe on this trade as well. It's got a 36% stake in Nissan. Yeah,
we should talk about it from the Honda perspective as well. The reason that some of these talks broke down, you kind of hinted at it there, is simply they wanted to acquire instead of a merger. And the idea here simply being that Nissan needs to get its finances back in order. And that turnaround they were expecting hasn't delivered the results that they wanted to. So they thought the acquisition might be a solution to that. But without that acquisition, without that kind of being in the driver's seat, pun intended, you aren't going to get the kind of returns you're looking for.
If you get back to the screen we just had up on the screen just a moment ago, the market is reacting very positively for Honda, very negatively for Nissan. And that's the problem here.
Yeah.
Is the market on board with this? I appreciate that these guys are trying to play catch-up with Toyota. But in some ways, you look at the market reaction here this morning, and the market is scratching its head about the terms that maybe were being offered. Was this the right deal for Honda, given the fact that what we are looking at this morning is a near 10% rise in its share price, with this deal not going through?
And meanwhile, while they tried to make their mind up, Toyota up on its third quarter earnings. But as you say, Honda really up more than 8%, Nissan down nearly 5% this morning.
Yeah, certainly the market share at the end of the day is what's crucial here, because Nissan's sales have been falling in both Japan, China and the United States as well, which brings us nicely to the latest we've heard from Donald Trump and the tariff story there. He's really amping up the narrative on China, now talking about really suspending the U.S. Postal Service kind of payments from, or suspension of under $800 per package. So that really immediately targets likes of Shein, of Temu, etc. He's talking about removing the de minimis rule, which kind of helps with that as well. He's also, and I thought this was interesting, Panama coming out and saying they're actually going to reconsider the Hong Kong port deal. Remember, there are 4 around the Panama Canal. 3 of them, 2 of them are Chinese firms. One is a Hong Kong firm and one is a Seattle-based firm as well. So the Hong Kong firm now talking about redoing that deal. This comes right on the heels of Marco Rubio visiting Panama. So some interesting moves there when it comes to tackling China.
It's really hard to figure out exactly what is going to work with Donald Trump's policies and what is not going to work, what is good and what is bad.
Yeah.
And I think the market is really going to struggle to separate those groups out. It's too early to tell exactly what impact we are going to see. Maybe they do have a legitimate case in Panama. Maybe they don't want Chinese influence in the same way. Then you look at what is happening with the de minimis rule. This has been a loophole, you could argue, that has been gaping wide for Chinese companies like Shein, to take advantage of what has been a really big advantage that they could generate by not having effective tax into the United States. And it's opened up all kinds of other sides to that story as well. DHL, IDS, PostNL, bpost, Austria Post. Bunch of companies this morning that could be affected by this. Keep an eye on logistics companies. And how does the IPO of Shein progress here?
Well, yeah, just to go back, maybe there'll be less impact of this given that, than in the first Trump administration, because companies have moved away from USPS for their international shipping. BI, Bloomberg Intelligence, is saying that this is probably more symbolic, this decision. But yeah, interesting to look at how other countries react to it. The FT reporting that the EU's looking to target US big tech if Trump takes his tariff threats to full implementation here in Europe.
That's certainly something we're going to be watching as well. We should also mention we are standing by for comments coming out of the Ministry of Foreign Affairs in China as well. I imagine they have something to say as well when it comes to not just the kind of shipping story, perhaps the tech story that Lizzie was talking about as well, and maybe even the Panama story as well. We are awaiting those comments. We'll bring them to you live when we get them.
Absolutely. An empty podium at the moment. Let's tell you what we've got coming up on the show today. Anna Botin, Santander's Executive Chair, is going to be joining us shortly, as will Jerome Grivet, Credit Agricole's Deputy CEO. Anders Opedal, Equinor's CEO, is going to be joining us on the energy front. Camille de Courcelles, BNP Paribas Markets 360. Joining us, we'll talk fixed income. We'll talk what the economic outlook looks like in Europe. And Henry Allen, from Deutsche Bank, is going to be joining us as well to talk about the markets picture. We have got a lot of earnings to work our way through this morning.
We certainly do, but it's not just earnings palooza. There's plenty of data coming out on both sides of the Atlantic as well. Let's walk you through. At 9 a.m. UK time, we get that Euro area PMI data, so that's going to give us perhaps a little bit of an indication in terms of how the European growth story connects. We have the UK, 1:30 p.m. UK time. U.S. economic data includes trade balance and PMIs as well, plus plenty of Fed speak. We've got Jefferson, Goolsbee, and, of course, the hawk of the committee, Bowman, speaking later. Richmond Fed President Tom Barkin as well is going to be joining Bloomberg's surveillance. We'll see what he has to say on that as well. Plus, the earnings story continues. We talked a little about the European earnings. We've got Qualcomm, Ford, Uber, Disney, and even ARM. Plus later, of course, the French no confidence. But I think for these markets, though, it's really the earnings story that matters.
Absolutely. So Alphabet, in some ways, a bit like Microsoft, a huge demand for its cloud services, wasn't able to deliver upon that. Therefore, the numbers were disappointing. AMD also out with numbers, a cloud theme there as well, still struggling with its data center chips, still struggling to catch up with NVIDIA. So a clear AI theme running through all of this. But the Alphabet numbers, like the Microsoft numbers, speak to very strong demand, which is also what we heard from Palantir yesterday.
But, of course, also the spectre over this is DeepSeek, the threat from DeepSeek. Google insisting that it's been efficient. The difference, though, being that DeepSeek's model's open to use. Google's costs money. So how long can Google keep this up?
It's a really fascinating one as well, because the cloud story is still not fully adopted yet. I think it's like 40 or 50% adoption. At the same time, they're trying to do AI. It's coming at the perfect time that they have so much kind of dry powder at the moment. They're still sitting on trillions of dollars of cash that they can deploy in this. Does that change if suddenly you have to deal with fines from the EU, if you have to deal with fines on other parts of the world as well? Meta, for example, making comments overnight over in Brussels, actually, where Leslie, you just were, talking about the fact that they're not going to comply or not signing on with the EU Regulation Act. That means fines down the pike from the EU.
Just to come back to the investment and the amount of cash that they have, is cash the moat at the moment? Like, we can deploy so much cash, everybody else can't, therefore, as a result of which, we will continue our lead when it comes to the AI story. The problem with that is the DeepSeek model has just undermined that a little bit. The return on investment in some of this data center work that they're doing, is that going to be high enough to justify kind of the prices that we're seeing in terms of the shares at the moment? And I think that's the key question that the DeepSeek challenge poses right now. And yes, they've got lots of money. And yes, Alphabet's saying it's going to invest a lot of it. But will that money be invested well? And I think that's where investors are just beginning to question the narrative a little bit. Let's turn our attention to what else we are talking about this morning. At least 10 people, including the gunman, have been killed at an adult education centre in Sweden. The nation's Prime Minister called it the country's worst mass shooting. A final death toll, a conclusive number of wounded and a motive have yet to be determined. Gun violence, very rare in Sweden, though there have been several incidents in recent years in which people were wounded with other types of weapons. In what could be a dramatic US intervention into the Middle East, President Donald Trump has proposed America taking over the Gaza Strip and assuming responsibility for its reconstruction. He says the move could turn the war-torn territory into, quote, the Riviera of the Middle East. Trump made the comments during a news conference with the Israeli Prime Minister, Benjamin Netanyahu.
I do see a long-term ownership position, and I see it bringing great stability to that part of the Middle East and maybe the entire Middle East. And everybody I've spoken to, this was not a decision made lightly. Everybody I've spoken to loves the idea of the United States owning that piece of land, developing and creating thousands of jobs.
There are circa 2 million Palestinians living in the Strip. Trump has insisted that Egypt and Jordan will take in Palestinians displaced from Gaza. The French Prime Minister, Francois Bayrou, is expected to survive two no-confidence votes later today. If he does, it would allow him to implement the much-delayed 2025 budget. He used a special constitutional provision Monday to push the finance bill through Parliament without a vote, triggering today's censure ballot. Bayrou built support by pledging to reduce the deficit to 5.4% of economic output from 6% last year. Now, that's a much less ambitious target than his predecessor, Michel Barnier, who was seeking a 5% goal. Is this a temporary phenomenon that the Bayrou government survives? I think that is the key question here. Yes, it's managed to get through a budget. It looks like having a bad budget is better than no budget, according to many parliamentarians in France now. We've got to that point. But are we still looking at an election sometime later this year, a parliamentary election. That still seems to be the consensus.
Well, I think it's fascinating here that it almost feels like from a market perspective, we've forgotten what the initial issue was, which is that we are looking at, for instance, looking at a 6.1% deficit this year without this budget. We've gotten that down to 5.4%, but that is still not enough when it comes to addressing some of the market's concerns. We're still looking at a spread in terms of OATs and boons, about 71 basis points. That spread has not closed yet, which means that the borrowing costs are still incredibly expensive for French
Do we expect
customers.
it to close, though? Is this the new state of affairs? Is stability enough now for France? Yes, we have seen a widening, but do we now stay where we are right now? Is political instability going to be with us for a while?
Yeah, I mean, he doesn't have a majority, so he's not out of the weeds. There could be more no-confidence votes. It's interesting that, yes, Bayrou's going to expected to get through these no-confidence votes. It's the same trick, this emergency push that Barnier used, but he's like to get a break, Bayrou, because the Socialists and National Rally will likely let him get away with it. But as you say, how long will they let him get away with it?
Precisely. Once the budget's through, I think the game is back on. And I think the pressure will mount, and I think that'll be something that we will have to watch very carefully, and the bond market certainly is.
And indeed we will. But coming up on the programme, Novo Nordisk says sales growth will probably slow as it continues to build supply for its blockbuster diabetes drug. We'll check on the pharma heavyweight stock at the open. Coming up. Plus, we're following up on the breakdown of the Nissan-Honda deal, as well as the read across to Renault and European autos. But up next, Santander Executive Chair Ana Botin is going to join us after the Spanish lender announced big buybacks. If you've got any questions of your own for our guests, please do send them in to us on IB plus BBTV Go. Stay with us. This is Bloomberg.
Welcome back to the opening trade. We're in the midst of earnings palooza on both sides of the Atlantic, and one earnings story that certainly caught our eye this morning has been in the banking story. Santander reporting pretty blowout earnings. Let me walk you through the numbers here. That four-quarter net income coming at about 3.3 billion euros. The estimate there was about 2.9 billion euros, according to Bloomberg. They're also planning a 10 billion euro buyback over the coming years, on top of also reporting a full-year profit at a record high, a record CET1 ratio as well at about 12.8%. Who better to walk us through these numbers than the executive chair at Banco Santander? Ana Botin joins the program. Ana, a pleasure to have you. We thank you so much. These are some pretty blowout numbers. Walk us through how you beat them in the coming quarters.
So it's great to be with you. Record results for the third consecutive year, creating value for our shareholders, TNAV per share plus dividend per share at plus 14%. And delivered by growing 8 million customers, growing revenues, profitability, and returns. So much higher returns, very close to the top end of our range for the 3-year plan. And cash dividend per share paid during 24 was up close to 40%. So in summary, and the increase in profitability, the strong capital generation, organic, has resulted in us announcing a 10 billion in buybacks for 25 and 26. Or from 25 and 26 earnings, from regular earnings and anticipated excess capital, and that's in addition to our standard cash dividend distribution, of course, subject to corporate and regulatory approvals. So again, all our 5 divisions really doing well, growing revenues, increasing profitability, and one transformation, which is one of the key levers we have to continue to create value, doing exceptionally well.
Well, Ana, let's talk about that profitability story. It is very clear from your results that Santander is firing on all cylinders. But I'm specifically curious about the maybe ripple effects to your bank from some of the policies coming out of the United States. We know that you had the distinct pleasure of talking to Donald Trump, of course, at the World Economic Forum in Davos. Since then, we've seen Donald Trump issue and then pull back about 25% tariffs on Mexico. We also know that Santander is one of the top 5 banks in Mexico, and about 12% of your profit comes from that part of the world. Walk us through how the tariff story affects your business. Are you preparing for that possibility in less than 30 days?
Our track record shows that in a challenging market, and we anticipate a challenging and volatile market, we do better than our peers. And in 25, we expect to both grow our bottom line again, with the revenue stable and costs falling, again, due to the one transformation, And already this year, and this is important, our revenue and business diversification protects us from falling rates, which is probably the case in the new environment. So 4 of our 5 global business, which is the corporate bank, wealth, consumer, and payments, which amount to 50% of our profits, all expected to grow revenue in 25. Again, one transformation helping us to consistently improve our operating leverage with costs expected to fall. And in this environment, cost of risk is important. We're aiming to maintain cost of risk at current levels. Remember, employment is one of the biggest drivers, and that is maybe deteriorates a bit, but we're at historic highs. So again, our diversification setting us apart from others and guiding to better profits and profitability in 25.
Anna, good morning. It's Guy. Early indications are that the market likes the numbers that we're seeing this morning. Looks like the share is going to be up 2 to 3%. That's the early indication that we are seeing. There are other questions about Santander's scale and whether it is too big, whether or not you are doing too much. And your ROE targets look great. The numbers you delivered this morning look really solid. That is your preferred metric, and you are delivering upon that. But do you think a more focused footprint, maybe smaller, more focused footprint, would allow the bank to deliver a price to book that is north of 1 and a return on assets that maybe could push higher as well? I think it's at 0.7 right now. I may be slightly wrong on that number. But do you think the return on assets number, do you think the price to book number could go higher if Santander was a little bit smaller and a little bit more focused?
So we are only scratching the surface of our potential as a group. I said that this morning in my quote. I want to say that we're in a new era of value creation and very confident that it is our scale, diversification, and the impact of our transformation, which will allow us to continue to increase profits and profitability into 25 and beyond. That is what sets us apart from peers. So if you look at Santander...
But Anna, in terms of that global scale... you said last weekend that you're reviewing your business in the UK. What exactly are you looking at here? And do you have a sense of what would need to be done to improve that performance here?
Let me address that at the end. So let me just say that in order for us to allocate capital to different geographies, we don't need to sell. We have been doing that for the last few years. Our preferred metric, as we said in our Investor Day, is TNAV plus dividend per share. In the last 2 years, that's grown by 31%. That is a very different growth perspective than most of our peers. We can reallocate capital through businesses and geographies, and we've been very strict on that. As an example, one of the strongest countries in value creation, and that is not just the last 5, but the last 10 years, is the United States, in euros for our shareholders. So again, yes, it's our diversification by businesses and countries. And what we call one transformation is bringing together all our retail and consumer platforms. That is what Santander is. 70% of Santander is retail and consumer. Some key markets contribute more than others. But the key is that over the last few years, we are showing in our numbers, our track record shows it's working. We have basically flat cost and revenues growing at 9-10%. In retail consumer, which includes the US, Mexico, Brazil, UK. That is, very, very strong results. That division is at 18%, 19% return on equity this year.
Anna, we have to leave it there. We thank you so much for your time. Anna Botin, the Santander executive, of course, joining us on blowout results from the bank. We look forward to seeing how those shares open in just a little bit. Coming up on the program, we do continue with the banking conversation. We're going to talk to Credit Agricole Deputy CEO Jérôme Grivet after the French bank beat on fourth quarter profit. Oh, of course, the big theme here is going to be the buyback story. It's going to be the profitability story. You just heard it from Anna Botin there, talking about the volatility and talking about this uncertain geopolitical environment. This is going to be crucial as we talk about not just what's going on in France, in Spain, and of course in the United States, but the ripple effects. Right now, you are seeing risk sentiment quite substantially lower when you look at the futures picture. Euro Stoxx 50 futures down a whopping 0.4%. DAX futures down 0.3% as well. Perhaps taking a breather from the green on the screen we saw yesterday. The French bank interview is next. Stick with us. This is Bloomberg.
29 minutes until the start of trading here in Europe. We've got an awful lot of corporate releases to factor into our thinking this morning. This is what futures are telling us. We're down by, let's call it, a third, pretty much across the board. I think if you average all that together, S&P is still dealing with some of the tech fallout from yesterday. That needs to be folded in as well. But it's definitely a morning of corporate results. As we await, though, some data later on, let's focus as well on what is happening with the bond market. Remember, we get PMI data out across Europe this morning. We're going to get fresh data from Spain and from Italy, both of which should be interesting. But at the moment, it looks like there is a bid back into the bond market. As you can see, Germany, France and Italy all catching a little bit this morning, a bit of a bid this morning. Yields moving lower, but we'll keep an eye on what the data delivers and we'll break that PMI numbers, those PMI numbers in the next hour for you. But let's get back to the earnings story right now. And back to the banks, Lizzie.
Yeah, European banks in focus this morning. Crédit Agricole posting a fourth quarter profit that beat analyst estimates, partly driven by strong growth in its asset management and insurance units. And we can speak now to Jérôme Clivet, Deputy CEO of Crédit Agricole. Thanks so much for joining us, Jérôme. Good morning.
Thank you
a beat
for having
on
me.
profits. Just walk us through these earnings, would you please? I'm especially interested in your FIC performance.
Well, the revenues were very strong across the board, I would say, especially in two business divisions. The first one is asset gathering and insurance activities, where we have had a very strong performance both from Amundi, which published its results yesterday, and the insurance business also, as well as the wealth management entity, Suez. And it's been also the case for large customer division, including CIB activities plus custody. And within CIB, of course, FIG continued to perform very well. I remind you that our FIG activities are not trading activities or prop trading activities. We are not so much involved either in flow business activities, but we are very much oriented towards providing solutions to our customers, and this continued to be very, very active in the last quarter and the full year 24.
And Jérôme, you've been tipped as a potential successor to Xavier Musca as head of Crédit Agricole's corporate and investment bank. Are you throwing your hat in the ring?
I will not comment decisions that can be made by the next CEO after he takes the helm in next May. I'm very happy doing what I'm doing now. I'm very happy to be with you today, as I have the habit to do every quarter. And I intend to continue to work within this group in the coming years.
And Jérôme, of course, we are thrilled to have you in that capacity. Let's talk about perhaps another role that Crédit Agricole can take, and that, of course, is in the banking consolidation space. We know that Crédit Agricole is looking to increase its stake in Banco BPM to about 15% from currently 10%. That puts you almost at the fighting courts with the likes of Andrea Orchel over at UniCredit. What happens if Crédit Agricole loses that battle, or how are you positioning for that possibility?
In Italy, we consider that even if we've been there in the last 15 or 20 years as a very active player in the banking market, we are not an Italian bank. We are a French bank developing Italian activities, developing them very profitably because, for example, in 2024, the whole of our Italian activities generated over 1.2 billion euros of net profit. It's again close to 15 or 16% of the net profit at Crédit Agricole SA. And so in this landscape where we have retail banking activities, we have also asset management, CIB, consumer credit businesses, insurance activities, we want to continue to develop. We have partners and we have also our own activities. And the purpose of all the moves that we are making in Italy is to defend our interests and to be able to continue to grow.
Does that mean you'd be willing to accept a minority stake or even an offer from the likes of UniCredit? Is that something you're considering?
It's way too early to see exactly where all these offers that we've been seeing in Italy in the last several months are going to end up. So we have different optionalities. We have the capacity to negotiate in the best of our interests. And again, it's way too early to tell exactly what is going to be the final landscape in Italy.
Jerome, you just said something really interesting. We're a French bank, we're not an Italian bank. Are you a European bank? Shouldn't that be how you are thinking about things as we move possibly towards some sort of a banking union? Or do we still have to think of banks as national entities?
Well, you see, when it comes to retail banking activities and commercial banking activities, what we are seeing in Europe since now several years is a continuation of domestic consolidation. It's not really a pan-European cross-border consolidation. And there are two very simple reasons for that. The first one is that there is no real possibilities of extracting synergies in merging a retail bank in one European country with another retail bank in another European country. There is no such thing as a banking union, and so there's no point in trying to merge two banks in two different European countries. And in addition to that, we continue to see quite significant regulatory hurdles to cross-border pan-European consolidation. So there is going to be consolidation, and there has already been consolidation in certain business lines, in asset management, in consumer credit, in custody activities. We are taking part in those consolidation operations, but when it comes to retail banking activities, it continues to be domestic.
Is it easier to do deals when it comes to asset managers? That seems to be the kind of the read at the moment. And is that a more logical route, therefore, for Agricole to continue down? Is that where you see the opportunity maybe to be a consolidator, maybe to play a greater role in the asset management, asset gathering side of the business? Is that where Agricole's future kind of lies as a more pan-European operation?
It's clearly an area in which we've already engaged quite significant consolidation operation in the last several years, and we intend to continue to do so if reasonable opportunities arises. Amundi has been built over a series of acquisitions that were very well integrated, and this is going to be the target of Amundi going forward. But we've been also an acquirer in some other businesses, like, for example, wealth management activities. We've acquired and completed the acquisition of Degroof Petercam last year. It's been up to now a very profitable acquisition, and we've been able also to consolidate in the custodian business with several significant acquisitions by CACEIS in the last 4 or 5 years.
Jérôme Grivet, Deputy CEO of Credit Agricole, we thank you so much for your time, of course, on this earnings day. We appreciate you joining us this morning. I want to bring you some live headlines coming out of China at the moment. We are getting a live press conference from the Chinese Ministry of Foreign Affairs. They are hitting some lines, especially in the kind of light or in the context of some of the tariffs and some of the just kind of issues and hurdles been put on things like packages from China. It looks like China's foreign ministry spokesman is commenting, of course, on the Spring Festival holiday, saying that they don't need unilateral new tariffs, but instead a dialogue with the United States, repeating a line that we've heard several times from the ministry. They're also saying that the U.S. is using the fentanyl issue as a pretext for tariffs. They go on to say they oppose the tariff action and urges the United States to correct the act, and also saying that the duties on EU's potato starch range from anywhere from 12.6% to 56.7%. I think the top line there is they are encouraging a dialogue with the United States, and they are pushing back on some of the fentanyl accusations. Let's see.
Well, coming up, we're going to get back from the tariff story to the earnings story. Equinor reporting better than expected results, boosted by higher natural gas prices in Europe. We're going to speak to the CEO of Equinor next. Anders Opedal joining us. This is Bloomberg.
Let's continue talking about earnings. 17 minutes to go until the start of trading here in Europe. Equinor out with figures. The energy giants are basically beating estimates. The adjusted operating line looks pretty solid, certainly ahead. North Sea performance looks pretty good. $9 billion dividend this year. The number that stands out as well is the cash flow. Cash flow, really strong, positive cash flow, and that looks like it's ahead of estimates as well. The company's CEO is Anders Opedal. He joins us now. Anders, great to talk with you. Are these kinds of numbers that you've delivered this morning with the Q4 figure, with the capital markets update, sustainable going forward from here? And do you need to continue to see high gas prices for these numbers to be delivered upon?
Yeah, good morning to you. Yes, I think it's really strong numbers. It's strong numbers due to kind of clear actions we took in 2024, improved our business, kept our production for oil and gas high, and actually are able to improve it. So we've been able to increase our free cash flow, which is enabling more dividend capacity going forward. So we have solid operational results, and this will also enable strong free cash flow in the years to come.
In terms of, though, that feels like it's all driven by the hydrocarbon side of the business. And I'm wondering what is happening on the renewables side of the business. Donald Trump is now in the White House. He appears opposed to renewables. And I'm wondering how your view of your renewables business is therefore evolving. Do you basically see that renewables business, particularly in the United States, in the deep freeze for the next 4 years?
Well, we have an investment profile in offshore wind particularly. We have seen that this industry has had some headwinds, and at this capital market update, we announced a 50% reduction in renewables investment compared to last year's outlook. This is really reflecting the market as we see it, and this goes across the world. And of course, there are changing policies around renewables in different places of the world, which is also kind of reflecting kind of the potential outlook for new investments as well. So we are adjusting the investment level in renewables according to the market outlook as we see it now.
Well, Anders, on that theme, what we all want to know is, having bought that $2.5 billion stake in Ørsted, the Danish wind giant, back in early October, are you going to raise that stake? Because Ørsted's share price has fallen, I think, about 40% since you announced you were buying the 10% of the company. So if it was a good deal then, why not buy more now?
Of course, I cannot comment on any potential M&A. We never do that. The investments we did in Ørsted is due to kind of long term. We see an offshore wind industry that will improve, and also then the investment in Ørsted was one of the elements that we did in order to reduce our own Capex, and that is what we're also announcing today.
You're also pursuing the Rosebank project here in the UK. It seems like you're racking up an awful lot of policy risk around the globe.
Yes, this is reflecting in the changing political sentiment around the globe. We see that some of the frameworks that used to be quite stable are up for debate. Of course, we cannot do anything with that, but what we are doing is make sure that we build a very resilient business. We have strong balance sheet. We have strong, resilient, and robust projects in all parts of our business, making sure that any changes in policies is something that is not necessarily kind of deteriorating our financial results. But it is a challenging world out there now, and but with robustness and resilience, we are able to weather that uncertainty.
Anders, it's Creedy in London. I want to talk to you a little bit more about your LNG space as well. Are you looking to do more LNG deals in the near future, in the next 12 months?
Well, as you have seen from the results this quarter, we actually have very strong LNG results in the trading business, but also the results, it's reflecting that the gas prices has increased, and it started to increase in the autumn of 2024. A slightly colder winter in Europe than previous years will give a lower storage level coming out of this winter than previous winter, meaning that Europe needs to replace more gas into the storage than last year. In other words, we think that to come back to 90% storage level, Europe will have to attract 230 more LNG cargoes this year compared to last year. So clearly, the LNG trading business and the gas business have some potential upsides for us over the next year, so particularly over this summer.
Well, potential upside, certainly, but I imagine a good chunk of that is coming from the United States. Are you thinking about how Chinese retaliation on the energy front could affect all of that? Are you positioning in a way that prepares you for some sort of even further retaliation, not just from China, but from other countries around the world as well?
Our gas business is very much dominant about being a resilient and a trusted provider of gas to Europe. We can provide the gas to Europe for less than $2 per MMTBU. So we are very, very robust towards any changes in the gas market. With some of these tariffs that is coming, we might see that there will be some rerouting of ships. Ships that were supposed to go to Europe will now to Asia, will now go to Europe, etc. So we will see a change in the market, but we are very robust in that respect.
Anders, can I just take you back to my first question and then also some of the comments that you've made about what the European gas market is going to look like? You've indicated that you think Europe is going to have to buy a lot of extra cargoes. And I think probably the arithmetic, the maths suggests that that is correct in order to fill back to the mandated 90% levels that we need to see going into next winter. Is it therefore your anticipation that gas prices do not drop in the way that they normally do during the summer months? Is that what you expect to see this year, and therefore it is likely that energy inflation in Europe is likely to be elevated throughout this period?
We definitely see that there is a risk to the upside for higher prices due to the reason I mentioned with lower storage levels. And it really depends on regulators what kind of mandated level they will refill the storage level, of course. What I'm indicating is that with a high requirement for storage filling, there will be more LNG required coming to Europe, and with increasing demand for LNG in Asia, this will be a competition for this LNG, and particularly also if we have a warm summer in Asia with necessary more electricity being used for cooling, there could be some price spikes over the summer. But so what we expect is a kind of a volatile market with more need for natural gas in Europe over the summer.
All right, Anders Opedal, CEO of Equinor, joining us this morning. We thank you so much, walking us through, of course, the geopolitical impact, but also what it does to LNG repricing and offshore wind as well. We thank you so much. All of that's going to feed into the commodity picture and, of course, feed into any potential inflation forecast for the future. That takes us right to the Federal Reserve. Joining us now is Ben Rahm, cross-asset strategist for Bloomberg's Markets Live. Ben, walk us through this. Should the markets be pricing in more of an inflation uptick in the near future?
Absolutely, Kriti. If you look at Treasury front-end rates of late, they've been sending us a crucial message. What is that message? They're saying essentially, look, the Fed may not be able to cut rates as set out in its dot plot. If you look at the two-year rate, it is barely 10 basis points lower than the Fed's effective rate of 4.33. So that is highly unusual in a policy this deep, this late into a policy loosening cycle, because if traders truly believe that the Fed will be able to cut, the two-year rate will be a lot lower and the spread more deeply negative, since the markets are nothing if not a discounting mechanism of what is to come. When the spread approached zero or turned positive in previous loosening cycles, the Fed had to terminate its rate cuts within about 6 to 8 months. So the markets are essentially saying that, look, with core PCE still closer to 3% than 2%, and given the outlook for stickier inflation, especially in light of tariffs, traders are doubting whether the Fed will be able to shoehorn those rate cuts as intended, which is why I think it's not a good idea for the markets, the overnight index swap section of the markets, to be pricing in oodles of rate cuts from here.
And Ben, if I could take you to the impact of European politics on markets today, how big a risk is this confidence vote in Prime Minister Bayrou for French bonds when you've seen notes rallying into it?
Not a very big risk, Lizzie. There are signs that Bayrou's government may survive the no-confidence vote. If he does survive, French bonds will rally by only about another 5 to 6 basis points, since much of the optimism is already priced into the markets. If the government falls, then we will go back to the 80 basis point spread over Germany that prevailed through much of last year. Remember that Moody's already downgraded France in December, and they have factored in a materially weaker public finances over the next 3 years. So it's not the end of the road for bondholders, even if the government falls today. We have been in a political kind of limbo for the past 6 months, and that is very much factored into the equation of bond investors.
Vane, can I just take you back to the issue of tariffs and inflation and where we judge the market to be correct on its inflation outlook? Should I be looking at the bond market? Should I be looking at the shape of the curve to tell me what the bond market thinks is happening in terms of the tariffs and therefore by extension the impact on inflation? Or do break-evens give me a better steer? Where should I be looking? Where are you looking for the best read on how the market is perceiving that tariff/inflation risk?
I would look much more at the flattening of the curve because the 2-year yield is going to discount the Fed pricing out the rates. So I think that the 2-year yield is going to go higher, and therefore we are going to get a flattening of the yield curve.
Fen, great to catch up. Thank you very much indeed. Bloomberg MLife Cross Asset Strategies. Fen Ram, remember you can catch up with the whole team. Keep up with the analysis. You really need to do that right now. MLive Go is where you should find it on your Bloomberg terminal. Update on what we're seeing out of China. I think there's this kind of very calibrated response happening, I think, in Beijing at the moment to the Trump tariff story.
Absolutely. Some top lines coming up on the fentanyl issue. They're saying the fentanyl issue is a U.S. domestic problem, saying that they are one of the toughest nations on drug enforcement, but most notably saying that the U.S. has made irresponsible moves on the Panama issue and calling on the United States to stop oppressing Chinese firms. They declined to comment, however, on the USPS package haul. We're going to dive into that throughout the rest of the show. Stick with us. This is Bloomberg.
Wednesday morning, good morning. Couple of minutes to go until the opening trade. If the market is a weighing mechanism, there is a lot being put on each side of the scales right now. We're trying to figure out how it all fits together, what kind of a narrative it delivers. There's a lot going on. As a result of which, I think it's worth kind of paying attention to kind of where we are and the kind of momentum and direction of travel. Yesterday, we did see a rally at the get-go of trade. We've seen this, obviously, as maybe we get a more benign tariff environment being priced. European markets kind of went out here. The European markets US markets basically went sideways from there. After hours, though, we got a bit of a tech shock. That needs to be priced in this morning as well. We've still got ongoing geopolitical tension. That needs to be priced in. Plus, we've got an awful lot of corporate earnings we need to fold into the story this morning, Lizzie.
Yeah, a lot for markets to digest this morning, Guy. The tariff story still weighing on sentiment in the Asia session and into the European session, it seems, as well. Euro Stoxx 50 futures down 0.5%. We're also in the red for FTSE 100 futures and CAC 40 futures. We look to see if there's going to be a read across from USPS into the delivery companies here in Europe, and maybe a reaction from Honda Nissan being taken off the table as well. But Pretty, which stocks are you watching?
I mean, we're going to go back to, Guy's sensational 6 or core 6, if we can look at those. Novo Nordisk, of course, firmly in focus. I thought the CFO made some interesting comments here on the earnings call, saying that the Novo and competitors only cover 2% of the potential market in the States. So you are potentially going to see Novo indicated to the upside. Banking stocks as well, Credit Agricole and Santander, both coming in with some pretty strong results. And, of course, Renault, off the back of reports that Honda and Nissan may not be merging after all that going to show up at the opening trade, Guy.
Say circa 30% stake that it has in Nissan. So that's going to be significant this morning. Right, here we go. Time for Wednesday's opening trade. We're expected to open a little bit lower, but single stocks are really going to matter this morning. Santander, Novo Nordisk, what's going to happen with Renault? There's an awful lot to price in and factor into these markets this morning at a kind of bottom-up level rather than a top-down macro story. So the FTSE 100... barely budging this morning. We're down by 0.1%. The stock 600 barely budging, down by 0.1%. The IBEX is up a little bit more. Santander expected to open higher, 2 to 3%. Let's see if that turns out to be the case. So that's going to lift that market as well. Santander's up 4%, I'm being told. So that's probably explaining why we're seeing a little bit of outperformance coming through from the Spanish market. The CAC is down by 0.2%. We've got Agricole to fold into that story, plus plenty of French politics to fold into the narrative as well. We'll see how the DAX opens. We'll see how the SMI opens. We need to see what Novo Nordisk is doing as well this morning. What story do we take out of China as well? Plus also the auto sector. What's going to be happening with Renault? An awful lot to factor in, as I say, to these markets this morning. Lizzie, what are you seeing when it comes to the sectors and the single stocks?
So we've got just over half of sectors in negative territory across Europe this morning. Tech at the bottom of the basket, down 0.8%. Autos and parts, as you mentioned, Guy, second bottom, down 0.6%. It's basic resources leading the gains, up nearly 0.5%. But if you look at some of those earnings stories, for example, Santander up 5.2%, Total up 0.5%, GSK 4.3% up, Crédit Agricole nearly 1% up, and Vestas up 2%. So green on the screen for a lot of those names reporting this morning, Critty.
Yeah, Novo, we are seeing an open auction extension at the moment. They're halted, they're not trading, so certainly working through some heavy volume there. We'll see how that shows up. But broadly, when you look at the stock 600, you mentioned some of the banking stocks. Healthcare is actually in the driver's seat when you look at the stock 600 on the upside, for example. So you are seeing, as Liz, you mentioned, the Banco Santander story, but AstraZeneca, Novartis, GSK continues to move the healthcare story upwards, although it does feel like it's a story of weightings to the downside. So UBS really pulling down the stock 600 and the stock 50, I should say, down about 1% as well. Alongside, I'm seeing HSBC. I'm also seeing a lot of the tech names on the back foot, Guy. ASML, Schneider Electric, even LVMH not having a good day.
But it does feel as if it is a earnings narrative that is driving the broader narrative this morning. Santander's up nearly 7% this morning. We were talking to Anna Botin a little bit earlier on. That stock absolutely flying on what it is delivering and saying about what it's going to go, what it's going to look like going forward. GSK up by nearly 5%. That's a huge weighting on the London market. You are also seeing some of the other, as you say, healthcare names doing relatively well. In terms of where the points are being added this morning, it's Santander, it's GSK, it's Astra, it's Total out with numbers. You've got some of the Spanish banks doing really well. Even BBVA up by 1% this morning, adding quite significantly to the upside.
Yeah, perhaps adding from the, or I should say maybe returning, pairing some of the losses they made earlier in the week around the Mexico story as well, given that those stocks are so much more exposed. Let's bring in Henry Allen, macro strategist over at Deutsche Bank Research, to walk us through some of this. I mean, as Guy was saying, this is very much a sum of all parts trade that we're seeing this morning. What's interesting, we're seeing almost a pullback in earnings, a little bit of a slowdown in earnings in the States. And then you look at the earnings here in Europe, and they're much, much stronger. How does that add up in your view?
Well, I still think the backdrop is fundamentally bullish. I mean, even though, clearly there's going to be a high bar for these tech earnings, the Mag 7, and we've seen a bit of disappointment, obviously, with Alphabet overnight. I think, these comparisons to the dot-com bubble we've seen, particularly since the DeepSeek fears last week, I think they're completely overdone. I mean, when we were thinking about the dot-com bubble, the Nasdaq was up 86% in a single year in 1999. We haven't seen anything like that sort of growth today. When the dot-com bubble started to burst, we were seeing a start of an economic slowdown in 2000. Again, the macro picture is actually much more positive today. Only this week, the ISM manufacturing hitting its highest level since late 2022. So in spite of that tariff story, actually, I think there's a lot of macro optimism in the picture. So, fundamentally, we're still bullish net overall.
You said despite the tariff story, isn't that the elephant in the room? Isn't that the kind of the make or break for stocks, especially here in Europe?
So it is, but then as we've seen with Canada and Mexico, there's this kind of will they, won't they? And then markets kind of pull back and then they're suddenly relieved again. So we're all kind of dealing with this chronic uncertainty as to whether they're actually going to be in place. And I think, yes, markets are trading off that, but then to some extent they've been trading off that since the election and Trump's victory back in November, because you had this wave of euphoria that, we're going to get tax cuts, we're going to deregulation. There was a lot of kind of happiness about that. But then in the backdrop there was, well, what's going to do about tariffs? And then kind of we get this February 1st deadline, we've got these April 1st deadlines, there's, been the delays, and then we don't know what's going to happen next. So, I think this kind of uncertainty is already priced in.
But, Henry, is it not inevitable that Trump's going to have to follow through on more tariffs than just on China when he needs that revenue to offset some of his tax cut promises?
So I think he could, but equally I think what Trump has also shown from his first term is he's incredibly relaxed about deficits, that for all this rhetoric that we want to get debt down, by the end of Trump's first term, the US was running some of its, even before COVID, some its largest peacetime non-recessionary deficits ever, and the national debt kept going up and up. And even, on baseline forecasts in this term, the US national debt is probably going to exceed its post-World War II record. So I think Trump is pretty relaxed about that. And as long as they can get the scorecard to look OK over a 10-year horizon, I don't think they mind too much.
OK, it's interesting that's how you're kind of modelling it. Does the volatility, therefore, necessarily have to be high because there's so much policy uncertainty?
I think so, and I think that's already subtracting from growth, because after all, if you're any corporation or business or indeed an individual, you're looking where to invest, and you're thinking, OK, might there be tariffs there? And even European businesses are already affected despite the tariffs, because something we've been looking at is a lot of German automakers already do business in Mexico and then take those cars into the United States. So even if there aren't tariffs on the EU, that's still affecting EU businesses because they've got operations in Mexico. So businesses are always going to be dealing with this chronic uncertainty. But at the end of the day, the whole discussion we have in markets is always, there's that cliche, businesses hate uncertainty, but uncertainty is, at the end of the day, a fact of life.
Should US businesses get used to a 10-year at 4.5%, and should US businesses get used to a dollar as strong as it is?
I think they should, because fundamentally, if you look at long-end rates, all the fundamental pressures, not just from tariffs immediately and short-term inflation, are pushing higher. If you look at the pressures on governments to spend to fund aging populations, that points to higher yields. If you look at defence spending.
Is that a problem for growth? Is that ultimately going to be something that slows this equity market down? Can the equity market continue to deliver the kinds of returns it's delivered over the last few years with the dollar where it is and yields where they are?
I don't think we're going to see the kind of 20% returns that we've seen over the last couple of years, partly because in 2022 markets were coming off recession fears. So you kind of saw, even though there wasn't a recession, you kind of had your classic recession bounce back because the recession was priced in. So I think you're going to see that slow, but I think 10 to 15% returns are still possible because you've got a very fundamental backdrop where the Fed is still cutting rates and probably still going to cut rates. That's the direction of travel they've made clear, into a soft landing. And if you've got that backdrop, that's historically been very, very favourable for US equities.
A lot of strategists this time last year were calling for equity markets to do very little. 2024 was going to be a tough year. Everybody got it wrong. How much bias do you think there is at the beginning of this year not to make the same mistake again?
I think 100% there's been an overcorrection. And if you look similarly in 2023, most strategists are calling for a fall because of what happened in 2022. And then the market rose quite significantly. So you've always got that bias in place. You see in forecasters in all facets of life, they'll overcorrect for the last mistake. You see in political forecasts, people overcorrect for the...
How much are we overcorrecting, do you think? You say 10 to 15%?
Yeah. I think that's certainly possible because at the end of the day, there is no sign of a recession. There's no sign of fears of a recession. I don't think the Fed are going to hike rates this year, particularly with the Trump pressure. And, yes, the bar is higher because no one fears the hard landing anymore. But fundamentally, the norm is, if we have growth at 2 to 3%, potentially with some upside risk, some AI productivity, I think that's still an absolutely plausible bar that can be cleared.
In terms of the performance we're going to see this year, Eurostoxx 50 has done 7.8%. In January, the S&P has done 2.6. Does the rest of the world... Why doesn't the rest of the world continue with that performance for the rest of the year?
I think partly because, US growth fundamentally is running stronger than the rest of the developed markets. We think of US growth kind of in 2.5%, 3% as rapid. Now, historically, that's not rapid because the US used to grow at kind of 4 or 5% if you go back decades. But compared to Europe and Japan would dream of those kind of numbers. So I think fundamentally there is always going to be that sense that the US is outperforming. And the US also very much now has a growth-oriented administration. Trump very much has said he wants to lead America to the new golden age. He's got deregulation, the tax cuts. They've kind of got an agenda to achieve that growth in a way that Europe, there's still a lot of outstanding question marks. Yes, they recognise the competitiveness issues, but are they actually able to deal with the policy implementation? Much more question marks there.
Does deregulation outweigh the tariff risk? Is that kind of the way the market is thinking about this?
I think to some extent, and I think they're also hopeful that the corporate tax cuts as well, if they come in, are also going to help equities in the US. But I think part of the reason markets are, I think, sanguine on the tariff risk is because in his first term, and I think what we've seen is different to that, but in the first term, they didn't actually have much of an economic impact. I mean, it's worth remembering that whenever a country imposes tariffs, as we've seen with the US, that causes your exchange rate to appreciate, so dollars become more stronger, that makes it cheaper to import, and that's actually offsetting some of the risk. Also, if your central bank is keeping rates higher because inflation's going to be higher, again, that's going to strengthen your exchange rate and, again, offset some of that tariff risk. So I don't see it causing a big change in the economic fundamentals. I don't see, the US trade deficit suddenly going back into balance.
Well, I asked the deregulation question in the context of the fact that we're talking about banking consolidation here in the States, or here in Europe, excuse me. And yet, it does feel like people are trading the banking consolidation story, but so much of the banking consolidation story is based on competing with the United States and the deregulatory agenda there and the capital rules requirements there as well. So is the way to trade deregulation in the States, in Europe, to really just trade the banking consolidation story in Europe?
I think that would be a good trade, and certainly if you see already the delays to the Basel III rules, you can see how the EU are reacting to the fact that the US is going to have a more deregulatory agenda, and as you can see right here in the UK actually as well, and in the EU, they don't want to find themselves outcompeted by the US. So I think almost you've got kind of this deregulation race where each side wants to stay competitive in the same way you saw in the past with corporate tax rates, that generally there was this push lower in corporate tax rates over recent decades because no country wanted to find themselves outcompeted. I think actually a story, particularly as memories fade of 2008, is going to be that actually deregulation is much more in vogue. People don't want as much red tape. There's a sense that this is being an obstacle to growth, and I think actually that, a bit like we saw with corporate tax rates in the past, could be a big reason for rallies in both the US and Europe.
Henry, if I could bring you back to the central bank story. On Friday, we're going to get this R-star report from the ECB, the neutral rates report. On balance, when you're listening to the Governing Council, are you interpreting them as suggesting that neutral is terminal in Europe?
I think so, yes. I think the big risk for them is obviously with the tariff story, and I think also because they've pre-committed effectively to saying that rates are still going to come down, it's going to be hard for them to backtrack off that, even though, as we found out earlier this week, inflation in Europe was a bit stickier than expected, both headline and core coming in a little bit above expectations. But I think because you've got those lingering fears of tariffs, we've already kind of knocked half a point off our European growth forecast as a result of that. I think it's going to be hard for them not to keep lowering rates, and as a result of that you're going to see, I think, more euro weakening because markets aren't pricing in the fact that the Fed are likely to remain on hold given the tariffs are going to be inflationary for the US, but for Europe, if they do impose tariffs, that's probably going to be deflationary there because of the growth hit.
What's the Fed hiking risk?
I think it's low in the sense that, you know, I'd say maybe 20-30%. It's not my baseline at all, partly because having cut by 100 bips, to hike in the near term would basically be to admit kind of an institutional error. It would be to admit that those cuts were probably wrong. And I think where you've also got political pressure from President Trump now, who's made it quite clear, you know, he doesn't want rates to go up, I think that's also kind of effectively going to add to the
How long can the Fed stay on hold for?
I think basically unless inflation starts crossing the 3 mark. I think if inflation, kind of PCE inflation, starts going above the 3 mark, then that's going to up the pressure on them. So,
but if in the current scenario, it's basically just sit tight and wait and watch.
At least a year, yeah.
So how long does that phase last for? So let's say the data stays as it is at the moment. Are we basically on hold for the rest of this year?
I think so, yeah. Because, you know, the Fed have said themselves their bias is still towards easing. That's where the dot plot goes. That's what, you know, the Vice Chair said yesterday.
Do the markets need cuts to go up? Do the equity markets need cuts to go up?
No, because they're already pricing it in. And actually, I think, as we saw last year, if the reason they don't get cuts is because growth is outperforming, then you can see yields go up and equities go up.
As long as you don't get inflation with that, that's OK.
As long as inflation doesn't go above the 3. I think if inflation lingers above target, we'll be OK.
Nice to see you.
You too.
Henry Allen, macro strategist, joining us from Deutsche Bank Research. Let's take a look at the core 6. This is what it looks like this morning. This is the picture we have. And there's a number of names on here that really stand out. Novo is definitely one of them. Look at that. The pharma sector is having a very, very good day. LVMH and Ferrari, maybe a little less so. Ferrari out with numbers yesterday. We're going to get an all-electric Ferrari. Is my response to that. ASML is down by 1.33. Schneider, you got a reaction there to the data centre story, and Nestle, a little bit of weakness there too. But there's plenty of other stocks we need to be focusing on, particularly the banks, plus a number of other names. Joe Easton's got all the details.
So the standout stock for me today, Guy, is Banco Santander, rising almost 8% now in Madrid. Now, I'm speaking to traders in my chats at the moment, and they've been saying that it is a blowout report from Santander. One trader said the market was only expecting a €7 billion buyback. They've done 10 billion. They've also beaten on the capital ratio and the net interest income. That stock rising the most in 2 years and actually hitting the highest level since 2018 for Santander, really the standout. Then in terms of pharma, as you've mentioned there, Guy, Novo Nordisk, one of the big gainers, the obesity numbers actually reassuring. Bear in mind, that stock did come off around 40% since the July high last year, but the obesity drugs do look pretty strong, actually, towards the high end of some of their previous guidance in terms of the sales growth for that one. Then the other one was GlaxoSmithKline. Now, this seems to be mostly linked to their oncology. So vaccines looking a little bit weak on Glaxo, but the oncology numbers, the cancer drugs, actually really strong. So, again, another big mover for Glaxo. We don't normally see a stock as big as that in London, rising as much as 6%, but a decent move for that one. Then finally, a bit of red in terms of the other initial movers. So Renault coming down. Now, this is, of course, tied to the Nissan story overnight. Potentially that deal with Honda collapsing. Remember, Renault is the owner of around a third of the Nissan. I had to get that right in terms of the relationship there. But that is the reason that its stock is down, because they are a big shareholder of Nissan. So weakness in Nissan overnight feeding through into Renault this morning. That stock getting hit in Paris. Then in terms of rating changes, I love a bit of a mea culpa, and we've got one from Morgan Stanley saying that they should have upgraded Richemont earlier in January. They missed the big rally in that stock when it jumped after the earnings. They're saying they're upgrading it today. They've kind of apologised for not upgrading it earlier, but they say the valuation still is justified in terms of being overweight, so they upgraded that one today. And then another one to bring in briefly was ST Micro. This one is downgraded at Bernstein, which says there's no bottom in sight for the Franco-Italian chip maker. After we saw the upgrading guidance from Infineon yesterday, they're waiting for ST Micro to do the same. They haven't done that, and that stock is declining as Bernstein cuts the stock this morning.
Joe Easton from our equities team walking us through some of those early movers. We thank you so much. Coming up on the program, we're going to look at some of those sectors very much in focus, including energy in Europe. Wind turbine maker Vestas boosting its energy outlook, while Equinor scales back its renewable energy ambitions. More on that and some of the other sectors in focus next. Stick with us. This is Bloomberg.
With some of these tariffs that is coming, we may see that will be some rerouting of ships. Ships that were supposed to go to Europe, to Asia, will now go to Europe, etc. So we will see a change in the market, but we are very robust in that respect.
So that was the Equinor CEO, Anders Opedal, speaking to us after their earnings earlier this morning. Let's get some analysis now. We're joined by Rachel Morrison, who leads Bloomberg's coverage of gas, power and renewables here in Europe. Good to have you with us. We were talking to the CEO, earnings higher than last year, beating estimates, and yet the shares are down 0.8%. What's so offensive to traders?
I guess a big part of it is them cutting back on their renewables spending and what their ambitions are there, which is kind of in line with what we've seen with other oil and gas majors, but comes at a time where there's quite a lot of headwinds in the US for green tech. And yeah, it's kind of part of that growth story. You know, where is growth going to come from if they're not going into green energy, if they're just focusing more on oil and gas?
I'm trying to figure out why Vestas is going down this morning, because it felt like a positive read. We're going to get the CEO on tomorrow morning. Is there anything that stands out that the market could be latching onto? The stock gapped higher this morning. I feel like I'm having a UBS moment I did yesterday, and is now starting to roll over. These numbers look fairly solid. Is it just that expectations were slightly different in terms of where we were coming into this? Is this actually they deliver good numbers, now's the time to sell, they've delivered good numbers, so sometimes it's better to travel than arrive?
Yeah, it's a good question. I mean, it was a positive statement. We saw share buybacks and dividend reinstated, which is obviously, you know, giving money back to investors. But it could be around not believing the growth story. Yeah. We need to check in and see how people are feeling about that. But, yeah, the US, they do say that onshore wind in the US will be a growth market. It was one of their biggest markets in 2024, and they continue to see growth there. So they're positive on the US. So it's definitely not a Trump overhang as things stand.
Actually, I look at the longer-term share price. It's been fairly static, actually, from November, December, January, and the stock is now down by 3.5%. So the market's clearly latching onto something. We'll figure that one out.
Talk to us about the Ørsted story, though. I mean, we're seeing two different stories from Equinor and from Vestas, at least in the trade this morning. How does this set us up going into Ørsted tomorrow?
Yeah, it's going to be really interesting. There's a new CEO, and we've had a few statements from people sort of wondering whether he's going to be able to come out with some kind of strategic review that he can do of the business, because obviously Ørsted needs a turnaround. They've had huge write-offs, lots of problems in the US, and he has been at the company for a long time, so the question for him will be, do you have any new and good ideas that can actually turn the company around?
There's certainly something we're going to be keeping a very close eye on. Bloomberg's Rachel Morrison all over those renewable energy conversations and earnings stories. Tomorrow at 7:30 UK time, we'll be speaking with the Vestas CEO. Henrik Andersen is going to be joining the program, Guy.
Looking forward to that conversation, trying to figure out exactly what the market is reacting to this morning. Let's talk about Nissan, Renault. Trying to get that pronunciation right. Nikkei is reporting that Nissan is basically going to abandon its plans to combine with Honda. Effectively, Honda is not going to take over Nissan. Craig Trudell, who leads our global automotive coverage, joins us around the table with more. Why?
I think this has always been a sort of a tenuous potential deal, in part because there are sort of big egos at these companies. I think we only have to go back to the Carlos Ghosn takedown to appreciate the extent of that. And I guess what amazes me is the extent of the sort of bruised ego on Nissan's part. About this idea of what Honda is willing to offer for this company, and the pressure that they've been putting on Nissan and the managers.
Effectively a takeover.
Yeah,
it will become a subsidiary.
It's not a merger, right? I mean, this is a case of one company that's worth 4 or 5 times more than the other. This isn't a merger of equals. It isn't a merger at all. And I think Honda made clear back in December when these two companies did an initial sort of tentative deal, they really were sort of pretty clear and public about the idea of, look, Nissan needs to get its house in order for these talks to go forward. And it hasn't been clear in the weeks since then that Nissan's really taking seriously this idea of fixing itself.
Yeah.
Renault has a big stake. I think 36% is what Guy mentioned in Nissan as well. Those shares down about 2% in French trading today. Walk us through what that turnaround plan looks like. What specifically do they need to address when their market share is dropping in Japan, China, and the United States?
I mean, they needed Honda for things like putting hybrid powertrains into their vehicles. That could be one sort of potential path to them. Putting in a floor to the market share loss that they've been enduring. But I think they really, unfortunately, they need to take tough actions like close plants. It's absolutely been the case that this was a company that was run for sort of growth. We go back to the Ghosn days and sort of talk about them with rose-colored glasses. He bears some of this as well in terms of really having bigger eyes than this company had the stomach for the products to be able to sort of fill those factories. And it's just become more apparent over the years that this company needs to restructure in substantial ways.
So, Craig, the reasons for the takeover are still there. The problems at Nissan are still there. Is this completely off the table, or could it be back on the table if the personalities and the price were right?
I think that's a really good question. I think there's also been, just in the weeks before these companies came together to make this announcement, sort of official, there was some interest on the part of Foxconn in Nissan. I think there's also some potential that maybe somebody would be willing to step in and try and kind of catch a falling knife and do the dirty work of cleaning this company up, and maybe that isn't Honda. I think the big question that sort of arises from that is, what's going to be palatable to the Japanese government, because I think all along it's been sort of viewed that that's who's really behind the scenes here, trying to put these companies together, trying to find a Japanese solution for these two companies that will lead to Nissan at least, keeping Japanese factories as many as possible around.
OK, so we watch out for a potential future deal if it's the Japanese government really pulling the strings. Craig Trudell, we thank you for that analysis as we look at the Honda-Nissan deal off the table for now. We'll be back with plenty more on the programme. Do stay with us. This is Bloomberg.
This is the opening trade. We're at 30 minutes into today's session. We are seeing some mixed picture here, though, because if you look at the market, breadth is certainly not on our side. We are seeing a mostly downside market, although perhaps a little bit of positivity to the upside. The earnings reports have been broadly positive. The stock 50 about flat at the moment, but like I said, the DAX is down about 0.3%. The other indexes pairing some of those early losses, Guy.
Let's talk about geopolitics. Could be a dramatic intervention into the Middle East story. President Donald Trump has proposed that America takes over the Gaza Strip and then assumes responsibility for its reconstruction. He says he could turn the war-torn territory into, quote, the Riviera of the Middle East. Trump made these comments during a news conference with the Israeli Prime Minister Benjamin Netanyahu.
I do see a long-term ownership position, and I see it bringing great stability to that part of the Middle East and maybe the entire Middle East. And everybody I've spoken to, this was not a decision made lightly. Everybody I've spoken to loves the idea of the United States owning that piece of land, developing and creating thousands of jobs.
He has a different idea, and I think it's worth paying attention to this. We're talking about it. He's exploring it with his people, with his staff. I think it's something that could change history, and it's worthwhile really pursuing this avenue.
American president insisting that Egypt and Jordan will take Palestinians displaced from the Strip. Not everybody in the Middle East is as convinced as the US president appears to be. Horizons Middle East and Africa anchor Jumana Basechi joins us now from Dubai with an update. This has caught many people by surprise, Jumana.
Yeah.
How viable is this?
Yeah. Well, that's the big question. I think many people are shocked over here. The region is actually reeling from the reaction to those comments that he made in the press conference with the Israeli Prime Minister last night. But listen, if you go back over the last couple of weeks, Trump had sort of insinuated that he wanted to, and this was, quote, language that he used a couple of weeks ago, clean out the Gaza Strip. And we got more information yesterday as to exactly what that might entail. For the first time, he was quite explicit, saying that the U.S. need to take ownership of the Gaza Strip. They would then be responsible for the reconstruction, for the dismantling of some of the unexploded bombs, weapons. But that could only happen so long as the current Palestinians residing in the Strip were moved to neighboring countries, including Egypt and Jordan. Shocking to hear such explicit language coming out from the U.S. president, and a real case of him upending decades of U.S. foreign policy in the region, not least because there was no recognition or no mention at all of the progress towards a two-state solution. And of course, the U.S. for a long time had been saying that they would like to see a two-state solution created in the region on the back of those Oslo Accords in the early 90s. No mention of that in yesterday's statement, but also no paying respect to the fact that many Arab nations have rejected the possibility of accepting more Palestinian refugees into their countries. And so the reaction from the Middle East has been quite strong this morning. And there is a feeling from this part of the world that the suggestion is dead on arrival.
Jumana, you mentioned the regional reaction. At Davos, Donald Trump put Saudi Arabia right at the centre of his comments. We've heard about the investment plans from Crown Prince Mohammed bin Salman. We've heard, the possibility that Trump's first foreign trip would be to Saudi. Then you have Saudi responding to this, reiterating support for a Palestinian state. How do proposals like this on Gaza affect the Trump-MBS relationship?
I think that is a very key question, because one of the goals that Trump would like to achieve in the region over his next term is to get to that normalization agreement between Israel and Saudi Arabia. And it was notable that at 5 in the morning local time, this was very early, the Saudi Arabia Foreign Ministry put out a statement categorically rejecting the language that we used at the press conference. So they didn't say it explicitly, but what they did say is the kingdom unequivocally rejects any infringement on the rights of the Palestinian people. They also reiterated that the Palestinians deserve a right to their own statehood and to sovereignty. And by the way, Axios was reporting that the day before, even before this press conference took place, 5 Arab foreign affairs ministers alongside a Palestinian official had actually sent a letter to Marco Rubio, the U.S. Secretary of State, saying that they reject the notion of any forcible displacement of Palestinians. But then, of course, after that, President Trump went on to deliver those remarks. So they have definitely not gone down well amongst U.S.'s allies in the region.
All right, we thank you, Jumana Basechi, our Horizons anchor, with the context from the Middle East. We'll be back with plenty more on the markets in just a moment. This is Bloomberg. Welcome back to the opening trade. We're 39 minutes into the cash trade. We've got the Stock 600 trading sideways this morning. Stocks flat on the FTSE. Healthcare leading the gains this morning, sectorally off the GSK and the Novo earnings. Renault dragging autos to the bottom of the basket off the Nissan Honda news. That potential takeover off the table, and that weighing on French equities this morning. The CAC 40 down 0.3%, Guy.
Bit of breaking news on Apple. I wonder whether this is something you can fold into the wider geopolitical narrative and the tariff narrative. China is weighing a probe into Apple's App Store fees and practices. Remember that this includes taking a cut of up to 30% on in-app spending and barring external payment services and stores. So this is something that China is now looking at. If Apple resists making changes, the government may launch a formal investigation, and this ultimately, therefore, could become another flashpoint in the country's trade war with the United States. You obviously put the tariff story into this. You put what is happening in TikTok into this. It feels like there's quite a clear pattern emerging here. Now, the Apple results obviously have been showing of late concerns around what is happening with China and how big a drag that potentially could become going forward. This isn't going to make it easier.
Yeah, potentially one of the levers that they can pull as you perform. Perhaps we're creating a roadmap for how the EU could potentially respond should they become next in the firing line. Sticking with the EU, let's talk a little bit about the banking consolidation story right here in Europe. It looks like UniCredit's CEO Andrea Orcel has been speaking to their their staff in Germany for HVB, really reassuring their staff there this would any sort of potential combination with Commerzbank would, quote, only potentially affect HVB in the medium term, with a combination that would be much softer than many expect. Those comments coming from an internal memo sent last week referring to the German unit. They're also saying that the integration of Commerzbank and HVB would, quote, only occur after a period in which Commerzbank would be independently improved, applying our blueprint while HVB continued on its own trajectory. So, Guy, perhaps providing a little bit of maybe solace to the staff in Germany who may be worried about job losses down the pike.
Yeah, and that will feed back into the politics as well and how the politics deals with this story too. Let's talk about what else we are expecting throughout the rest of the day. At 9 a.m. this morning, we're going to get Euro area, UK and Euro area PMI data. I would like to point out that we've had the Spanish composite number and the services number out within the last few minutes, and they look a little light. They're still good, so 54 on the comp number, 54.9 on the services number, but those are below expectations. We get a lot of Fed speak a little bit later on as well. Jefferson, Goolsbee, Bowman speaking as well. Bowman, obviously the hawk. We've got Richmond Fed President Tom Barkin joining Bloomberg Surveillance. Look forward to that. Earnings, plenty of them. Qualcomm, Ford, Uber, Disney, Arm, all out with numbers. We've also got French politics to fold into the story as well. We are anticipating that the Bayrou government will continue in operation tomorrow. The expectation is that the censure vote a little bit later on, votes will be passed and that we will get a budget being pushed through into operation in France. Camille de Courcelles is head of developed market rates, strategy and economics for Europe at BNP Paribas Markets 360 and joins us around the table this morning. Is that priced in? Is there an expectation that this censure vote does not pass, that actually the Bayrou government continues? And if that is the base case, what is the expectation for how long it continues for?
Indeed, I think there is no broad expectation that this will not pass, because since then the Parti Socialist has said that they will abstain. The RN has also said that they would probably abstain. So the risk that it passes is very low in our view.
So where does that take us in terms of the rate story? We have seen a tightening over Germany. That has persisted over the last few months after the initial shock, obviously, the election and what happened there. Does that trajectory continue? Or is there still a belief that ultimately we are heading for more political turbulence later on this year?
So I think Bayrou's government has managed to get this tacit support from the left, from the Parti Socialist, which is key for the market, which makes that the political background is looking much more stable now. So that is good news for the market, that is good news for rating agencies, because as long as you have this implicit support, the rest of the opposition won't have sufficient seats to make the government fall. So that means that the budget in this is now looking very likely to pass in the next 2 weeks. So this is positive somehow for sentiment in France. And therefore, we have actually ourselves turned a lot more constructive on OATs since the start of the year. So we could still see OATs drift a bit closer to Germany, but the market has already tightened a fair bit. So we would tend to expect that 70 bips could still remain a resistance area. So 70 to 80 bips is likely to remain a range. And then in the second part of the year, what will become more important for the market will be any headlines on the deficit.
71 now. We're kind of at that 70.
I was just about to say, what brings it, substantially lower? If there's deficit concerns are still really not tackled at all, we're still looking at, I think, 5.4% is the deficit under this new plan. That hasn't addressed any of the concerns at all. What gets us back to that normalcy? Is there one thing that maybe the Bayrou government can pass that would get us there?
So I think to get back below 70 for a prolonged period of time, you would need positive news on growth. But we would tend to think that the 0.9% target from the government is looking a bit too optimistic. So we think that there is more risk that the market got a bit disappointed on the growth front. And on the deficit, I have to say 5.4% is a good target somehow, because it still shows consolidation efforts. But we think that in reality, we might get closer to 6%. So that's why we would still tend to think that it will be hard to break below 70 bips sustainably. Now it will really depend on growth, I think. But just to add that, I think when it comes to rating agencies, I don't think that we will have much news this year at all. So that could also comfort the market in adding a bit more long position in OATs.
5.4% down from like a 6.1% expectation is still quite the accomplishment from a very divided French government. Let's talk about it a little bit from a broader perspective here. There's been a narrative that the periphery will continue to outperform the core in a really big way, despite the fact that Spain, even Italy, are still dealing with very similar budget concerns that France is currently kind of temporarily perhaps waded through. Does the periphery still outperform the core despite the politics?
So I think, generally speaking, we should still see indeed a convergence. It has been played out in the market to a large extent, though. But I think, for example, in Spain, we still expect another rating upgrade, so quite differently to some risk in other countries from the core. In Italy, we would expect a stable, a change in the outlook from stable to positive by one of the rating agency. The periphery is still outperforming on the growth front.
Is that priced in, though?
So I think the market has moved a lot already, but I think it's probably like a long-term trade, like let's say a 2-year trade. I would probably favor being long Spain in particular among the periphery versus countries in the core.
Camille, how do you factor in the US? You've got all this uncertainty around Trump tariffs. You've got the risk that Donald Trump's fiscal policy means the Fed keeps rates higher for longer. How attractive does that make euro area debt?
So I think when it comes to tariff, the most important impact for European rates is negative impact from growth. So again, for us, it would, whereas I would say it's negative to the point where for inflation it might not be so much to the upside. It might be relatively neutral, maybe just slightly positive, but given that we expect negative impact for growth from tariffs, we would actually expect the ECB to cut at each meeting, so that won't derail the ECB to cut at each meeting. So therefore, in turn, we would still prefer to be long duration in the Eurozone, which is supported by the macro backdrop.
And what about the UK in all of this? Because it kind of seems like Keir Starmer is everybody's friend for now, including Donald Trump. Is the UK actually the unlikely haven?
Well, so far, let's see what Trump has to say. The headlines are quite volatile on that front. But the UK won't be insulated from tariffs and from retaliation from other countries in the world.
What do you think the Governor of the Bank of England says tomorrow?
So I think, a cut is largely a done deal. The data has been moving in this direction.
How many more cuts?
That's where I think we are different from the market. We still think that they will have to cut once a quarter. We think that the risk is for less in the next 5 months, let's say. But in the especially because of the uncertainties of the pass-through of the budget to inflation. But in the second half of the year, we think that if there is a risk, it's for more cuts. And just the fact that rates have been, the sell-off that we had in longer-term rates in January make that the Bank of England might be forced to cut more beyond this near-term inflation shock. So we would rather expect a flattening of the money market curve, and we still expect the Bank of England will reach 3.5% in Q1 2026.
So, Camille, let's continue our tour around the world. We've got a German election in just a couple of weeks. A big question has been the debt brake, or the suspension of the debt brake. What does that do to issuance, to the market plumbing of the bond market?
So I think debt brake normally would mean more spending, more bond issuance. We have seen a lot of positioning in this direction since October mostly. So, for example, investors have been going short asset swap spreads to express that view. But looking at the polls, CDU, CSU making 30%, followed by AFD at 20%, and SPD and the Greens much lower than that.
Yeah.
I think it increases the risk that we are heading into another grand coalition, which will probably take a very long time to achieve. And there is also another risk that we don't get a coalition that would be enough to secure two-thirds majority, which is required to change the debt brake, for example.
Yeah.
So there might be some disappointment, I think, compared to what the market is positioning for when it comes to extra issuance, extra spending in Germany.
Which is the turnaround story that you've seen on whether or not the suspension actually does indeed go through is fascinating. Camille de Corchel, head of developed markets rate strategy and economics for Europe at BNP Paribas Markets 360, giving us a little bit of a tour around the world. She was talking about Germany there. You can join Bloomberg tomorrow morning as we speak to some of Germany's most powerful business voices ahead of the election later this month. That, of course, is the Germany election CEO briefing kicking off at Thursday, 9 a.m. London time, 10 a.m. in Frankfurt. Our very own Tom McKenzie will be live on the ground.
Let's get back to the earnings picture. Alphabet shares tumbled in extended trading after reporting earnings that showed growth in its cloud business slowed in the fourth quarter. It comes as the company faces questions from investors about the billions of dollars that it's spending on AI infrastructure. In an earnings call, the CEO addressed the issue and spoke about Chinese startup DeepSeek.
There's been a lot of observations on DeepSeek. First of all, I think tremendous team. I think they've done very, very good work. I would say both are 2.0 flash models or 2.0 flash thinking models. They are some of the most efficient models out there, including comparing to DeepSeek's.
For more, we're joined by Matt Bloxham, senior tech analyst for Bloomberg Intelligence. Matt, good to have you. This disappointment around Alphabet really weighing on stocks last night. Was it that bad?
It wasn't, but clearly markets are very twitchy at the moment. I mean, in context, they missed by about 1.5%, and all of that miss was in this cloud business. But it's a $12 billion revenue in the quarter. The results came in just shy of 12. The market was looking for just north of 12, so $200 or $300 million. It's not really a huge amount, but I think it's about sentiment around that. Is that an omen of just generally softer investment in AI by corporates? And as you said, compared to the $75 billion they're going to spend in 2025 on Capex, how and when will they ever get a return on these huge investments? I think that's the big question that's weighing
So this is the bit I don't understand, OK? So they come out and they say, we're leaving business on the table because we don't have the capacity to take advantage of it. Similar message coming through from Microsoft. Then they say we're going to invest $75 billion, and the market doesn't like that. I don't know what you do with that as a business. If we had more, we could do more. But if we invest in more, you don't like it. So what do you do with that narrative?
I mean, a good CEO will kind of look through the short-term market sketchiness and say this is the right thing for our business.
Okay.
And we see the long-term, and we've done the numbers, and this makes sense. And there are tales of success and failure on that, on the judgment of the CEO. I think the good thing is, we're clearly at quite an inflection point. How much impact is DeepSeek or the Flash 2.0 models that Google's developing themselves going to have on the kind of processing power they need in these data centres? Data centres are built in a modular fashion. So if 6 months, 12 months down the line, actually there's a big technology revolution, they don't need to spend $75 billion, I think you'll see them quite quickly rein that in. They're clearly investing today from what they see the market today. All of their big US tech rivals, Meta, Microsoft, are investing similar amounts of money. You've got to be in the game, because if you don't...
So it can come to an almost hard stop, Chrissy. That's going to be really interesting to watch in terms of the hardware providers.
Yeah, I mean, and we see that in the tech cycles. Inventories go up and down quite rapidly. We've seen that perhaps more so in the last few years than we've ever seen before. So, yeah, you could see more of that happen again.
What matters more for American tech companies and the European read-through? Is it the cloud adoption, which is still, I think, only at like 40 or 50%, or is it AI Capex spend? What matters more?
I mean, I think they both matter. I think
pick one, Matt.
Yeah. Well, I can pick another one, which is that Google's business is really based on advertising. It's the bulk of the revenues, and the question is all this money just allowing them to defend their dominant position in search, or is it going to allow them to kind of monetize more effectively both advertisers and consumers? I think right now people are saying, well, are you going to pay $10, $20 a month to play with DeepSeek? No, there's like so many free options out there, and Google's made its business on providing amazing tools to people for free. So the question is, does this help them to grow the ads market, or are they going to get pressured by big rivals?
Well, speaking of pressure by big rivals, let's talk about the geopolitics as well. Tech seems to be almost impenetrable by the threat of tariffs or counter tariffs from the likes of China, even the EU as well. Is that something that needs to be priced in to this market?
Yeah, I mean, obviously they're going to see some pressure indirectly from certainly the likes of Google, from the cost of this equipment if it's coming from outside of the US. Obviously, it's potentially a bigger challenge for people like Apple, who are directly importing things from China. So I think it's another one of those kind of wait and sees. We've seen Donald Trump kind of pause on Canada and Mexico tariffs. We'll see whether it's the same with Europe. It's kind of a more of a negotiating rhetoric, perhaps linked to defence spending. But yeah, so I think investors are still trying to pick their way through that.
Yeah, absolutely. And we'll see if the defensive trade stays put. Matt Bloxham, senior tech analyst for Bloomberg Intelligence. We just get a quick check on some of these stocks that are moving in a pretty big way in Europe. Santander taking the cake here, up a whopping 7.3% guy after those buybacks and record profits for the full year.
Another stock that's doing well is Novo Nordisk. That stock is up by 3.75%. You do not want to miss our conversation with the Novo Nordisk CEO. That conversation is coming up right here on Bloomberg Television, 9:20 a.m. UK time. So in around 26 minutes' time, 24 minutes' time, I'll do my maths correctly. That is it for the opening trade. The Pulse is up next. This is Bloomberg.